Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy finance stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the finance sector, specifically in the capital markets industry, that both come in with a strong buy consensus from Wall Street and price targets that would imply a double-digit upside potential. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just before we get into that, it is Thanksgiving week here in the United States. I hope you guys are able to spend some great time with friends and family this week. Keep in mind that Thursday the markets are closed for the holiday and are open on Friday but closing early for Black Friday. And on that note, TipRanks is having a Black Friday sale. Right now you can get 40% off TipRanks premium subscriptions and some of our other premium newsletters like the Smart Growth Investor and Smart Dividend Investor. Head on over to the TipRanks website to take advantage of the sale now, or you can follow the links in the description down below as well. Now we found today's stocks using the TipRanks Stock Screener. Found right under the top of the research tools on the TipRanks website, I wanted a stock that had a neutral to outperform rating on the SMART score, double-digit upside potential, a strong buy consensus, and in the financial sector, and that gave us our list of companies down below. And just a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Let's dive right into our two strong buy finance stocks. First on the list, we're taking a look at S&P Global. They trade under the ticker SPGI, currently priced at $517 per share. We did talk about this stock back in March. Year to date, it has climbed 18%, and in the last 3 months is up 3.3%. S&P Global is a well-known name in the finance world, providing independent and transparent data, analytics, ratings, and benchmarks to the capital markets worldwide. They provide intelligence that is essential for companies, governments, and individuals to make decisions with conviction. Their business is broken down into 4 divisions, including S&P Global Ratings, which is the world's leading provider of independent credit ratings. Providing their opinions and research about relative credit risk, they have more than 1 million credit ratings outstanding on government, corporate, financial sector, and structured finance entities and securities. Then there is S&P Global Platts, which is the leading independent provider of info and benchmark prices for the commodities and energy markets with customers in over 150 countries. They also have their S&P Global Market Intelligence that integrates financial and industry data, research, and news info tools that help track performance, generate alpha, identify investment ideas, understand competitive and industry dynamics, and perform valuation and assess credit risk. And then their S&P Dow Jones Indices, which they describe in one word as essential. They're the largest global resource for index-based concepts, data and research, and home to iconic financial market indicators such as the S&P 500 and the Dow Jones Industrial Average. And S&P Global just joined an exclusive group that is Dividend Kings. Having just passed the milestone of 50 years of dividend increases, the company has been paying out a dividend since 1937. And their current quarterly dividend is 91 cents per share for a dividend yield of 0.7% and a very low payout ratio at 24%. Their ex-dividend date is tomorrow for payment on December 11th. They shared a strong third quarter earnings report on October 24th, where they had both a beat on earnings and revenue and also lifted their full year guidance. For their Q3, they reported earnings per share of $3.89, beating expectations by 25 cents per share. Revenue came in at $3.58 billion, which did grow 16% year over year and beat estimates by $150 million. The company now anticipates full-year revenue growth of 11.5% to 12.5%, and they anticipate to execute accelerated share repurchases worth $1.3 billion in the coming weeks. Several analysts have been weighing in on the stock following that quarterly report, including one from UBS who increased their price target. They said the stock significantly underperformed following those Q3 results, as the solid results in most segments and the guidance raise were overshadowed by another disappointing quarter in market intelligence. The firm is hopeful that a change in leadership can drive better performance even in a tougher environment, and believes the diversified business remains positioned for attractive earnings growth next year with potential for more to be unlocked. The S&P Global stock does come in as a strong buy based on 15 current analyst ratings, with 14 buys and just 1 hold. The average price target of $587 implies an upside potential of 13.5% from current prices. Looking at those ratings down below, our low-end price target does come from BMO with an upside of nearly 9%, while we have a couple high-end price targets at $610, which would be an upside of nearly 18%. Our second strong buy finance stock today is the Intercontinental Exchange. They trade under the ticker ICE or ICE, currently priced just shy of $160 per share. In the past year, they gained 42%. This is one that we did touch on back around, I think it was the start of July. In the last 6 months, it's gained over 19%. In the last 3, down slightly at 0.4%. The Intercontinental Exchange offers traders access to a wide range of financial markets across North America and Europe. Through ICE, traders and customers can access 12 regulated marketplaces and can deal in stocks, equity options, energy, and credit instruments. They also own and operate several clearinghouses in the US, Europe, Singapore, and the Netherlands, as well as one for credit. They got their start in the energy utility business before expanding into international marketplace services, so it's not surprising that investors can use it to trade in commodities such as oil and gas on the global scene. But they also give access to agricultural commodities, interest rate and credit instruments, mortgage securities, and even international stock market indices. ICE also pays a quarterly dividend and has been doing so since 2013. Their current quarterly dividend is 45 cents per share for a yield of 0.11% and a payout ratio of 30%. Their ex-dividend date is the 16th of December for payment on December 31st. They shared their latest quarterly report on October 31st, where they did come out with record revenue, though it fell slightly short of expectations, and earnings were in line with estimates. They shared third quarter earnings per share of $1.55, which were in line with analyst expectations, while they saw record net revenues of $2.3 billion, which did grow 17% year over year, but slightly missed estimates by just $10 million. The company also saw record operating income of $1.1 billion, which grew 31% year over year. Following that earnings report, we did hear from an analyst at Barclays who did slightly lower their price target but maintained a buy rating. They said that the company's Q3 earnings beat their estimates very slightly, with revenues a bit light, offset by lower spending. The firm says that ICE's energy business continues to fire very nicely, but the market is clearly reacting negatively to the guide down in the mortgage business. And earlier in November, we did hear from an analyst at Deutsche Bank who maintained a hold rating on the stock but did increase their price target. They said they view the macro backdrop into at least 2025 as potentially fostering greater capital markets activity with at least average positive equity market returns, supported by fiscal stimulus and potentially lighter regulation. Intercontinental Exchange also has 15 current analyst ratings, coming in as a strong buy, but they have 12 buy ratings and 3 holds. And their average price target of $181 implies an upside potential of 14%. Looking at those price targets down below, on the low end, we do have that hold rating from Deutsche Bank with a fairly flat price target, slight upside of 0.5%, while on the high end, we have a price target of $200 from RBC Capital for an upside of over 25%. So that is a quick look at 2 strong buy stocks in the finance sector, both with some double-digit upside potential according to Wall Street analysts. Let me know your thoughts on these 2 companies in the comments down below. I always love hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.